Welcome back to Squawk Box. Well, we've been watching the commodity space very closely, and do remember that over the past 6 months, a lot of speculative money has continued to pour into the commodity sector, and the agricultural commodities have really been benefiting from this, and many of them rising to multi-year, if not all-time highs. Wheat, corn, soy, coffee and sugar all benefiting from that speculative fervour in the commodities market. I do also want to say, though, that they have been enjoying their own fundamental dynamic strength as well, and they include several points here to mention. Higher standard of living in developing countries like India and China. At the same time, we have seen drought plaguing major grain exporters like Australia. On top of that, demand for biofuels. We're going to be talking about this later on. That's led to a reduction in food output and higher prices for staple products. And this has really been vividly exemplified in Mexico recently, with riots over higher tortilla prices. And lastly, higher energy prices have made the costs of production of these food commodities higher across the value chain. So the bottom line here is that surging food prices really been stoking inflation. You only have to look at the January PPI numbers out of the US to show you that rose 7.4% year on year, marking the fastest pace since 1981. And over here in Asia, a very similar story. Inflationary pressures building, heightened concern also about social instability in countries like China and Indonesia because of those higher food prices. Now, joining us now for more analysis is Nirgunan Tiruchelvam. He's equities analyst at ABN AMRO in ABN AMRO Asia, I should say. Nirgunan, good to see you.
Thank you, Sri.
Let's talk about the biodiesel dynamics, because I was reading your notes earlier. You said that when you look at the outlook for biodiesel, input costs have risen so sharply that producers are not turning a profit, even with oil at $100 a barrel. Does that mean that we could perhaps start to see some balance come in when you look at the supply for wheat, corn, sugar, for example?
That's correct, Sri. The biodiesel proposition is at this present moment unsustainable. Even at the elevated crude oil price of $102 a barrel, the feedstock costs are so high that it's very difficult for biodiesel producers to make a profit in this environment. Palm oil, for example, is trading at about $1,275 a ton, which translates to about $176 a barrel. So it's difficult for these producers to make a profit. Also, the governments of various countries, such as the EU and the US, are under severe pressure to reduce the incentives that they provide biodiesel and ethanol providers with.
From an equities perspective, though, the biodiesel stocks have really been flavour of the month.
Yes.
So does this mean that they are, from an equities perspective, valuations, etc., are they looking a little bit overstretched at the moment, due for a correction?
I certainly agree with that view. A number of the biodiesel and ethanol providers, as I said, are not profitable and are unlikely to make a profit given the high commodity prices.
And when you look at where we stand at the moment, I mean, it looks like a roll call of all the commodities. I mean, overnight we saw new highs for rice, new highs for soy. Are they looking close to their peaks right now, or does this rally have further legs to travel?
I think they are due for a correction. Our view is that a number of these commodities are completely overvalued. Soybean oil and palm oil in particular are due for a correction. We expect palm oil to have about 25% correction and soybean oil to have a 20% correction in 2008.
But the fundamental story, as I said earlier, does still look very compelling, doesn't it? I mean, you have this huge demand in this part of the world from China and India, developing economies. Then you have these shortages because of drought. That's only going to increase because of global warming. So you have this speculative bubble, I guess, in agricultural commodities. But at the same time, you have some strong demand and supply dynamics on the fundamental side now.
There's no doubt that the supply situation has been weak. However, that is not going to be sustained. There has been a great deal of palm oil planting in Indonesia and Malaysia during the boom years. As with any commodity, you cannot have a sustainable boom. If a boom in prices takes place for a couple of years, the producers of those commodities will adjust their production to ramp up production in such a way that the prices will eventually correct.
Let's get back to the agribusiness stocks, because I noticed that you've listed Wilmar International as one of your
Yes.
top picks. Can you tell me why?
We have a buy recommendation on Wilmar with a target price of $6.10, which provides us with 35% upside. Wilmar is the preeminent processor of soybean and palm oil in the world. For that reason, it will actually benefit from a prospective correction of the price of those commodities.
This may be off your radar screen, but what would you say to investors who are looking to get in on the big global agribusiness firms like Bunge, Archer Daniel Midlands? They seem to be the obvious plays to get exposure on the commodities boom on the agricultural side. Are you looking a bit overdone, or is there still time to get in on these stocks?
We don't formally cover those stocks, so I can't explicitly comment, but they have a business model which is broadly similar to Wilmar, and for that reason I think it may have some attractive value even in this market.
So just summing up, Nirgunan, you're looking at a correction then in most of the agribusiness, excuse me, or most of the soft commodities, agricultural commodities, but longer term, are you still bullish? Because the trend that I see in the commodities market is a near-term correction, probably over the next quarter or so, but then longer term, for oil example, a lot of people still looking at $100 barrel plus for the rest of the year.
There's no doubt that we are in an environment where commodity prices are at all-time highs. With any commodity boom, there are going to be periods where the prices actually fall. That's what Jim Rogers in Hot Commodities, which is the authority on this topic, has clearly stated in all his publications and all his public pronouncements, and I think that's a view that is worth giving a lot of attention to.
Okay, Nirgunan, thank you very much for your analysis this morning on the agricultural commodities market. I'm going to end it there, but then, Martin, I do want to say that we're going to be addressing some of these themes in my, I'm going to give it a quick plug here, my commodity store online, you can see, is open. Well, it'll be open on Wednesday. You'll be able to read my new column, although you can see the latest one on your screen there, and I'll be updating this in time for Wednesday. We'll be talking about the agflation, which is the new term, of course, that we've been banding around throughout the morning, and where agricultural commodity prices are heading. We'll try and be addressing some of those issues in the column. So do
post
get
it up
online.
and readable by Wednesday.
By Wednesday, yes.
Okay, look out for it. Thanks so much. Tiruchelvam there.